See, it's a good team.
Ladies and gentlemen, can I please have your attention? I've just been handed an urgent and horrifying news story. And I need all of you to stop what you're doing and listen.
All right, ladies and gentlemen, welcome back to another episode of Chart Talk, coming at you every Monday. Me and Bennett, giving you the goods. Let's get right into it. Let's start with the market outlook. So right now we're seeing the SPY, just S&P, just continue to break out. We're in this grinding higher mode. Once we broke this, 350 area level, kind of consolidated that move. We've just been grinding higher ever since. Could we use a pullback? Absolutely. But right now we're grinding higher on this 8-day moving average. And, we're just trending higher. It's really as simple as that right now. I'm not overthinking it. I'm not, over-anticipating a pullback until I see something change. That's really it, though. Just kind of sticking to the script. What are you thinking, Bennett?
Yeah, if you want to pull up this my SPY chart.
Surely.
We'll just do it really quick. Same thing. It's just the only thing is I'm trying to keep a stop below 360 for most positions. Just because most people are getting a little bit excited up here. We can drift higher. Yeah. We just want to protect it. And that's my little piece.
Definitely agree with that.
So, yeah, with that, we can jump into member ideas. We got Hunter looking at PEG through 58.
Yeah, that's a nice little support buy setting up. So you see nice little support area. It's kind of giving you the support these last 4 days. Break above this area. Nice little tight support buy. I like that one.
All right, then we had a couple questions, some of the FANG stocks. We're going to start with Facebook through this 290.
Yeah, I was looking at this chart last night and it looked pretty weak over the weekend. And then it just, once the market opened today, it just exploded. So there's no reason this stock can't go higher. It showed great relative strength today. Setting up a nice pattern at highs can definitely continue this run.
All right, next up we got Amazon through that 3,200.
This is Amazon, yeah, through that 3,200, 3,250 area, I've been staring at this one. I have a feeler in it. I was big last week. I kind of sized down, similar to the Netflix, where we were like, Netflix at support, it goes into hiding for so long. Do we think this market leader is really going to break down? I don't really think Amazon's going to break down. So I'm definitely watching it, but we haven't seen the price action that we're looking for. Mm-hmm. Zero relative strength. The name's just been in hiding, out of play the past few weeks. Very surprising to me personally, given what's going on in the market. But I'm definitely watching this one too, 3,200, 3,250.
All right, next up we got Google, G-O-O-G.
Googs?
Pretty much just through highs.
This one, it gave a great entry. December 1st was that 5 days ago, kind of against this 8-day. This is more of a momentum trade. Yes, I think it continues higher. I don't know if you want to buy these new highs. There hasn't been that much consolidation. Mm-hmm. I expect it to continue leading the market, but I'm not trying to. I need to see more to buy it.
Mm-hmm. And then one other one that was mentioned quite often today on our Instagram was people asking about Tesla, what they should do if they're in it now.
Right now you just hold it and trail it. You don't want to add. You don't want to buy more. But it's on such a crazy run that you want to, hold some for the big move. Right now, if you want to stop below the 600, that's keeping it tight. The technical stop you should keep is below this 541 pivot, but that's so far away. Stock's at 644. So, below that 600, I could see this one pulling back. But until then, just keep running.
All right. So those are the main ideas that we had from some of the members. This is a quick one today. We can jump into some of the good trades. First up, we got Heaven. In this, what ticker? C Limited.
SE?
Yeah, SE.
Nice. I love this SE. All right. Can you see the screen?
Yeah, I
got
start
this one.
Yeah. Let's see. So he got in this position on this December 1st through 182. He cut same day near lows due to the week close. Didn't respect the proper out versus... And so he didn't respect his proper out and missed the overall move. So this is, I guess, his bad trade of the day. And this has been a common theme where, you and I both talk about this, like upping your stop versus respecting the proper out. And this is, that prime example where had he respected the proper out, he would still have been in.
Right.
And I think that goes.
And here's I'll chime in for a minute. Here's what we see a lot, and this is like a huge mistake I made early on in my career, where we're in these grind up markets, is trying to day trade every day when you should just kind of sit back and hold your swings, give them the proper outs and such. Because you do too much, you're going to end up with a situation like this, and then the stock goes higher because everything's getting bailed out right now with the strong market. So just something I had to get over early in my career was just over trading these environments because everything looks so good. Instead, you just want to give things the proper room, let them work out.
Yeah, and even for me, we've been doing that monthly goal setting with a lot of the members, and even I was talking with Daisy, and that was the same lesson. It was like you're day trading too much. A lot of these setups aren't really worth it in the given day. If it's going to move 1 or 2%, it's not really worth it. Where if you can catch a Shopify or you can catch Netflix for 20 or 25%, like that's your trade of the month. That's what you want to focus on.
Exactly.
You don't want to like burn yourself out on a lot of these little cute trades that just take up more energy than they're ever worth. So yeah, very similar point on that. Next up for Heaven's Good Trade is we got this, was it Spotify?
Oh, he called this out for me. I bought this in long term. Big shouts to Heaven for this one. I wasn't staring at it. He's like, Spotify, big volume. Everyone bought it, and it's just been smooth sailing ever since. But I'll go through this one. I'll go through this one. So, I mean, macro pattern, macro breakout level. Spotify has this beautiful, beautiful macro consolidation, bull flag on the weekly. Not much consolidation on the daily in front of the level, and that kind of made it difficult to buy. But then, you see when we saw the volume really came in above the level, far side volume. That's what you love to see. And, and then look at the price action since. It's just absolutely raging. So Spotify is just such a beautiful name right now.
Yeah, it looks great. For this, would you, if you're still in it, say through that 292 area, would you, keep your stop versus like that 313, or would you still kind of give it a little bit more room?
It's tricky because I have it in the long-term account, so I'm not as massive position size-wise, so I don't have to, worry about every tick. So I haven't really upped stops yet. Maybe if it came down to like 300 or so, things would change, once you see that selling. But right now I'm just trying to have a macro point of view. This just broke out of a huge chart pattern, breaking all-time highs on huge volume. We're seeing institutional buying, so nothing out of a long-term trade. This is exactly what you want to see and start off. So if it was in my active account, I'd probably treat it differently, but don't have to right now. Gotcha.
Okay. All right. So with that, we can jump into some of our good or bad trades for the week. I have 3 of them if you want. I can start, and then you go over some of yours.
You just start.
All right. So you can pull up this Amgen first. This trade is kind of still in motion. This was a support buyback. We saw it pull in verse 218. We saw it start to turn back up. So we picked up some up through 224, verse that out. The next area that we're keeping an eye on is that horizontal green line, which is 230. So again, through 230, you kind of have some, room to go before it, runs to the next area resistance around 245. So this is kind of just a trade in motion. Hopefully nothing bad yet, just kind of working. Next up, we got Merck. If you want to scroll over one, Shake.
Sure do. Gotcha.
All right, so Merck, this is one we've been buying into. Again, I got a little early. This is end of November, bought up through 82. And then dollar cost averaging in this same area, kind of in the middle of this range, verse 79, verse 84. Just trying to get into some stock to be prepared for the 84 breakout. Again, this is more of a lower beta pharmaceutical name. This isn't going to be like a crazy biotech name just for how big Merck is. So I don't mind giving it some room, but I don't expect this to be like a 10 or 20 point trade. If I can get 5 or 6 points or move back to 92, that's my plan for this trade. Nice. And then the stop versus that support is 79. And then lastly is this Netflix. Again, you and I have both been in it, as well as quite a few members. And the main lesson I took from last month, messing up the Shopify trade, was to put more of my capital into the idea or the best idea for the month, which was Netflix. But putting so much size into it, going into Friday, I just sized down because I just didn't think it had, the momentum
they turned down
to push
pretty
it.
hard Friday. This is my bad trades too. We'll see.
So
it's different though.
So I sized down a little bit on Friday. I still have 25% of the position that I had originally. So now I have to be extremely patient with that. Still give that original 25% versus the proper out, versus 475, and looking to hold it for at least 570 for that retest all-time high. So now that I have less, maybe I'll have a chance to hold it more. But that was the main lesson that I sized down. And of course, when you do that, this is what tends to happen. So it's like you're bittersweet. Right. It's up 3.5%. I'm like, God damn it.
Yeah, right.
Those are some funny lessons that you kind of have to try to know. But what about you, Shake? What are you doing this week?
So I'll start with that Netflix and how I messed it up as well. I made up for it, but I have this thesis that, we were just talking about the FANG names, the Google, Facebook, Amazon, Netflix names, and how they just kind of been into hiding. So I had this thesis that these are going to be the names once they start to run. They're going to start leading the market again. So I had that same entry as you for Wednesday or whatever it was, or Tuesday, and then I had this inside day where it respected that breakout level, and then today's Monday, Friday, so Thursday, I had such a horrible ad because I have that thesis, and I was just in my head like these names are gonna come back, and I got just flat out greedy. It was just a greedy ad through the inside day. It could have ran, but it didn't give me enough consolidation to run. So I added some, and then I got out of that stock for a loss that day. I added some back Friday and today against that new support level that it formed, and I still did well in the trade. But you could see how this ad, it was such a bad ad. I was it was right off the open. It was, you look. Let me go to intraday chart. Come on. So you can see the ad here. It's right off the open, first 15 minutes of the day, and I was pretty much like the high tick of the day adding that stock, and I was never in the money. It was just such a bad ad. If I waited for it to set up throughout the day or such, that's different. But doing it right off the open when it's not the proper time to add, it's not coming out of a base, it's not coming out of a big pattern. It was just flat out greed. So I got lucky that I re-added and I was able to stick with it and kind of make that money back. But going back, I would not have added right here. And so that was really a big lesson learned there. My good trade, like a lemon. Holy shit, this lemonade. All right, so what I've been doing super well with this lemonade and just stocks in general is just keeping a tiny portion of my stock to that original out. So we originally bought lemonade this day for the base break through this like 60, what are these highs? 64.50, that area. And we had a nice little run, and then it came down, but I held on to probably 1% of my stock and just holding on to that with that original stop below 60 right here. And because of that, when it pivoted on that previous resistance area that we bought, turning it to new support, I was able to buy 64 versus 62. And today I was selling at 93. So I was selling for $30 on $2 risk. Pretty stupid, but if I don't hold that tiny little piece back to my original stop, to let me show like the trade has absolutely failed, I don't have confidence in re-adding here. So that was the key to the trade for me, was just holding on to that little piece that allowed me to buy that pivot, and we killed this name. Yeah.
I think that's one of the lessons that we refer to as like the one share tough guy, where you take your trade as you see fit, but you hold like one share just to keep an eye on that winner, willing to give it back to your price. And this is more for new. Like again, you probably didn't actually have one share, but that's
I had 10 shares. And
okay.
My original position was 2,000 shares.
Yeah.
So 0.5% of my position.
Yeah, so that's kind of a little lesson that we've been trying to teach, and as a result of that, we've had some members who've had some pretty substantial returns like this one because they keep that one or two shares to keep an eye on it, and they're still willing to give it. When you have one or two shares, it's like an insignificant amount of money.
But yeah, it's like in Netflix, only 0.25% of the position. You don't even worry about trading it correct because it's like a smaller amount of capital.
Exactly.
It's something I heard very interesting. Someone recently told me, and I used to hold too big of feelers back. I would hold 300 shares, let's say. Stevie Cohen, someone told me he initiates every trade with one share of stock. Stevie Cohen, worth $10 billion, who just bought the Mets, he initiates trades with one share of stock. So when I heard that, it was just like that just like legitimized a lot of stuff I was doing and made me hold smaller feelers.
Yeah, no, I'm with you on that. All right, any other trades you want to go over?
Nah, those two are solid.
Okay. All right, so if you want to jump into top ideas of the week.
Yeah, so I mean, this KC, I love this KC, man. It's a Chinese software company. It's perfectly flagging below this 42. If you don't, so the day it opened at 44, it just kind of sold off, so that it didn't really have much price action through that area. But now we could see, so you take this little area out of the price action. You don't really do it, but like it mentally, I'm doing it, seeing these other highs at 42.60, 43 area, and then this high is 42.80, this original IPO high. So it's like beginning this daily momentum flag right below this level. I think this one could explode through 43. So I'm in this one already versus 40 or so. I bought it a couple days ago versus 39. But I'm looking to add to that area tomorrow for sure. And then the next one is this FLGT. I think I hammer this one every week in Chart Talk. They sell COVID tests. Their earnings are up 800%. These type of growth companies, they usually matriculate higher. We had a great trade off lows here, and now I'm kind of reforming a position just against these lows, against this 42 right here. I bought Friday, I added a little bit today. We'll see how it gets up to this 48. If it does, that could be another add situation, but I think this one's going to break out pretty big.
Nice. The two that I'm looking at, we got this DPZ.
Oh, pizza, hell yeah. Both of these.
And this is, again, another one similar to like when you talk about Netflix, where like that proper re-add, which is more like today versus the other day, getting in 2 days early and not
Right.
being ready. For like this DPZ, it's like $395. I'll wait till then. I don't want to have to try to get $394, $392. Like I just want to see a break above $395, and that's when I'm willing to get in versus at $380. It's risking about 3%. Again, I was talking to a big money manager earlier today. I was at lunch with him, and he talks about how great money manager, but he's not the best trader, and he loves these like $20 stocks. And for a guy who manages hundreds of millions of dollars, trying to explain to him 3% risk on a $300 stock, where if it goes back to highs is 15%. He just can't understand it. He still wants to buy the $20 name that goes to 22, but he has to risk $2 to get the $2. But it's funny when you run into those situations. But that's the one focus, and then this CarMax through 98 versus 96, 95-ish. But again, this is one I took earlier, a couple of chart talks back, where I was too early. This was the beginning of October. Took a little bit of a loss in it, buying it through that 98. So now it's just setting up much better, still respecting that resistance area. So those two I'll be looking to buy this week. I have buy steps in for both.
Nice. Love it.
All right. So with that, we're on to book of the week.
All right. Let me start. I actually read this week, so. This is a really good book. I don't know how to pronounce the guy's name. Tony, he's the founder of Zappos. His last name is Hsieh. He's Asian. I think it's Tony Sai. Mm-hmm. So this guy recently passed away, and when you see these guys worth billions of dollars and they pass away, people will talk about, their business prowess and everything. Bezos came out and just said, like, this guy was the happiest, most, like, the best enigmatic personality, like, just a great guy, loving, all that stuff. And that's not really stuff you hear from guys that are worth so many billions. Mm-hmm. He's the founder of Zappos. The book is Delivering Happiness, A Path to Profits, Passion, and Purpose. I only read, like, the first section, and it's a really cool book. It's really almost similar to how we talk about in our handbooks. He begins talking about all his childhood businesses and how it low-key, like, taught him, like, crowdfunding and all these other things that he didn't realize were the key to him becoming a billionaire from Zappos.com. So it's just a really good book so far, and the guy's really respectable, just passed away, so RIP. But, yeah, what you reading over there?
So I'm reading one by Napoleon Hill. This is The Master Key to Riches. His most popular book is obviously How to Influence Friends, and kill me on this.
How to Win Friends and Influence People?
There we go. Yeah. So that's his most popular book. This is one of his second most popular, The Master Key to Riches. Again, Napoleon Hill's big come up was he was friends with Andrew Carnegie, and Andrew Carnegie mentioned that he would give Napoleon Hill access to some of the richest men in the country to be able to interview them, but he would never pay him a salary or pay him $1 for this opportunity, because the amount of value he would get back from that would make him one of the richest publishers of his time, and that's what happened. So this is one of his books that kind of breaks down a lot of the principles of some of these individuals. One of the key ones that I was even having a conversation with Heaven about was when it comes to your job or what you get paid for. There's two forms of currency. There's one, the actual paycheck you get from the job you do, and the other one is the experience you get from doing that job. So there's two separate forms of currency. Again, for us as prop traders years back, we had to pay a lot of money to trade, but we also got a lot of experience. And that comes in a lot of different ways. So that was, a lesson that definitely was very relevant to a lot of the mentors and people that are just starting to trade. So definitely a good book, but it is a little dense. There's certain chapters that if you kind of zone out a little bit, you're gonna have to start it back over. So it's.
Oh, and let me. So you just reminded me. Speaking of dense, the best part about this book is that the guy wrote it, and he made sure he had no ghostwriter. So it's just like it's his voice throughout. And the guy is like fucking hilarious. Like he's just so cheerful and has the funniest outlook. So it's such an easy read and such like an enjoyable read. It's a big time recommendation from me.
All right.
And with that,
I think that's it. I think we wrapped it up.
We out. Yeah, wrap that thing up. Give us a like, subscribe. Let me get out of here. Take the dog to the park.
All right, let's do it.
See you guys next week. All right. See you guys.